Welcome to the Runway, where we cover stories in Web3, AI, and tech. Today's Runway covers multiple hacks of Justin Sun's platforms, Russia, China, and the US AI arms race, Web3 games and trends, and some interesting Twitter thread analysis. It's Friday, November 24th. Let's take off. First up, we have a story here about Justin Sun and a lot of his platforms and his exchanges being hacked. I think this is the fourth time in 2 months that Justin Sun is probably the last Wild West cowboy out there in the space. Tron founder Justin Sun's crypto businesses have come under repeated attacks from hackers over the past 2 months, with at least 4 hacks on platforms related to the crypto entrepreneur. Sun's HTX crypto exchange has been hacked at least twice since the platform rebranded from Huobi on September 13th, 2023. It looks like the first hack was 8 million, then 30 million here of HTX. Poloniex actually was the largest hack, which showed a loss of about $100 million was stolen. The Hiko bridge, which is the Huobi bridge, also was hacked for 86 million. Justin Sun needs to do a little bit better job of oversight on some of his projects. Hopefully this isn't a trend that continues, and hopefully he tightens up security a little bit, because this is never a good situation. Next up, we have a story here. Putin says West cannot have AI monopoly, so Russia must up its game. President Vladimir Putin on Friday warned that the West should not be allowed to develop a monopoly in the sphere of artificial intelligence, and said that a much more ambitious Russian strategy for the development of AI would be approved shortly. China and the United States are leading the development of AI, which many researchers and global leaders think will transform the world and revolutionize society in a way similar to the introduction of computers in the 20th century. Interesting take here from Putin that I thought was worth reading. He said that you cannot ban something. If we ban it, then it will develop somewhere else and we will fall behind. So Putin said of AI, although he said ethical questions should be resolved with reference to traditional Russian culture, the monopoly and dominations of such systems, such alien systems, is unacceptable and dangerous, he said. Putin cautioned that some Western online search systems and generative models ignored or even canceled Russian language and culture. Such Western algorithms, he said, essentially thought Russia did not exist. Putin having this take here where, you can't ban something. If you ban it, it's just going to develop elsewhere. It seems like a lot of people in our own government are still failing to realize that when it comes to crypto and Web3. And individuals like Elizabeth Warren and Gary Gensler and the current administration seem to be essentially attacking the industry and pushing Web3 and tech offshore. But they have recognized the value in AI. With the article we looked at the other day about the drones, using AI and potentially being given permission to just execute people autonomously. The same arguments we're hearing from a lot of these effective altruists and a lot of these decels, as they're being called, that we just need the government to come in and regulate things, and we need to slow everything down, and let's have regulation and this, that, and the other. Be careful what you wish for, because the early signs are showing that these ethical characters and people in power that seem to want to really push the boundaries of what almost seems like a dystopian nightmare. If we move here to our next story, which also kind of weighs in here, NVIDIA stock under pressure after report of AI chip delay for China. Shares of NVIDIA Corp fell Friday following a report that the tech giant will delay the launch of one of its new artificial intelligence chips destined for China. NVIDIA will now roll out one of the 3 big AI chips for that market early next year, Reuters reported, citing sources. Earlier this month, a report surfaced that NVIDIA planned the trio of AI chips for China after the US government blocked it from selling high-end chips. There's a big power sort of play at stake here. A big battle brewing when it comes to the major superpowers of the world. And I think the biggest factor is the GPU compute chips, right? Highest end models of these types of chips. The U.S. government is sort of enacting a sort of limitation on exporting this technology to other countries. Gray markets and black markets exist, but really you do need massive scale to be able to produce anything meaningful with large language models and AI systems, right? So you need tons and tons of chips for an extended period of time currently. So expect this battle to ramp up. Twitter take we looked at last week with Rob. I can't remember who it was. I think it was his Twitter thread when he kind of discussed his contrarian view on China coming to California and extending an olive branch. And I think some of that may have to do with the fact that the U.S. is limiting chips, and chips is literally their gold right now. That high performance compute is really the gold of this era, or the oil of this era. And without that, you're going to be behind. A lot of factors at play here. China and Russia and the U.S. I think with the moves that Russia has taken, sort of alienating themselves for a large part of the world. And I think they're going to be in last place when it comes to this. The U.S. is a lot of things, but historically we've been less authoritarian. We have a constitution, although the government is continually encroaching on that and violating it. We do have, a constitution, and we do have rights. So the West has usually been a freer place on that front. And we've seen, a lot of tech talent leave China and come to the U.S., and a lot of tech talent leave Russia and come to the U.S. because of the authoritarianism and the totalitarianism. So let's see how this plays out over the next coming decades. Next up, let's look a little bit at some Web3 gaming stuff here. A 65% plunge in Web3 games in 23, but real hits coming. $26 million NFL Rivals NFT Web3 gamer. As the year winds down, every gaming company and its dog are dropping year-end review reports. A recent report from blockchain gaming accelerator Game7 suggests that many game developers had an enforced nap instead of pumping out new games. This year, just 223 Web3 games were launched, a 65% drop from the 640 games started in 2022, and even more distant from the 811 games that got going in 2021. So what's the deal with the sudden nosedive in output? Well, the optimistic answer is Rome wasn't built in a day. It seems to be what Immutable co-founder and president Robbie Ferguson believes, that many great Web3 gaming hits are on the way, but patience is required. The last year has been really interesting. Web3 gaming has had such an influx of investment. It's just the time lag of the production of games until we start seeing hits. Roughly 15 billion US has been invested in Web3 gaming over the past 3 years. The last crypto sort of market cycle, we saw huge investments in Web3 and crypto gaming, and it was one of the themes of the last market cycle. There was obviously a large bubble. We saw, but a bubble is a signal to the market, right? So this is kind of how free markets work. We get a signal that, there is investment needed here, right? And the market allocates that investment, and a lot of times it might oversubscribe that investment. That being said, there is a real demand and a real need there. And we're going to start to see the result of that over the coming, few years, right? Because any real, AAA game does take time to develop. It's not something that can happen right when you get the money, right? There's hundreds of developers that are involved. There's testing, there's building, and stuff takes time. The cream will rise to the top. We will see all the promise and all of the innovation added to the newest Web3 games that are produced. And, we're going to see the ability for gamers and people to essentially own their own assets and be able to sell those assets and to gain value from playing and contributing hours into these games and entertainment, right? Let's move on to our next story here. Just how big of a recovery will it take to bring investors back to Web3? The crypto community has recently been enjoying a welcome reprieve from the dismal climate of the past year, thanks to the modest uptick of asset values and the increase in overall activity. Still, it's far from clear if these recent gains will translate into more lasting interest in the decentralized economy. To recap, major crypto tokens have enjoyed higher prices recently, which has helped Web3 trading volumes recover to levels that we haven't seen since early this year. This uptick even cropped up the NFT market, where trading rose in recent weeks. While trading activity has since moderated from the tiny boom we had in October, the value of crypto-based assets have broadly retained their gains. The total value of all crypto tokens rose from just over $1 trillion in September to more than $1.4 trillion in October, and today rests at $1.38 trillion according to CoinMarketCap data. That's a lot of wealth being created in a short span of time. These markets are sort of the edge of innovation, and they're the cutting edge. We're on the bleeding edge, and you're going to see a lot of volatility on that front. So it's not unusual that there's very bubblistic natures to a lot of these concepts and ideas, and that capital flows in, and then capital flows out, and then more will flow in sort of over time, right? So there's a lot of volatility, but there's real promise here, and I think that as we get closer towards perhaps a new administration here in the U.S. and it's sort of a changing of the guard, hopefully, we see more confidence come back to markets. We see interest rates lowered in the future potentially, which will signal sort of a more risk-on appetite to the market. And I think we're seeing a little bit more capital start to be deployed after being very, very scared and left on the sidelines. And you're seeing some of that naturally flow into riskier things, right? When more innovative things, more things with more volatility, chances of success and failure, higher chances of failure, but also if success is met, a huge upside, right? So that's what we've seen over the past couple months. Finally today, I'd like to talk a little bit about some interesting tweets I read and sort of give a little bit of analysis and commentary on those. This is Sam Lyman. Let's do a central bank digital currency. I think it's time for us to move in that direction. Amid Senator Warren's moralizing on crypto money laundering, never forget what her ultimate goal is: the destruction of Bitcoin to make way for a CBDC. Warren is usually effective at hiding her true intentions, but on this rare occasion, she let her guard down, and she can barely contain her excitement at the prospect of a CBDC. Note that this interview aired the same month she first introduced crypto AML legislation. These two things are inextricably linked. Warren frames her latest bill, the Digital Asset Anti-Money Laundering Act, as little more than an attempt to crack down on illicit finance. In reality, it's a nuclear warhead pointed at the industry. Make no mistake, Warren's AML bill is the crypto killer. It would drive innovation offshore by imposing impossible burdens on miners, validators, and wallet providers. It would decimate an entire industry overnight, making it virtually illegal to do business with Bitcoin in the United States. But that's the point. Warren wants to cut crypto off at the knees because her true intention is to eliminate the competition to make way for a CBDC. Anyone who signs Warren's bill should know what they're really signing up for. Step 1 in the implementation of a central bank digital currency. Interesting take here, and I think that a lot of these authoritarians, they love central control, right? They don't want anything that's free, that's open source. They don't like that. They don't like not being able to be in control, right? It's just in their nature. They want to be have the power to observe what you're doing, know what you're doing, know what you're thinking. They're uncomfortable with the very principles that this nation was sort of founded on. Skip one over here. We'll pop over to this episode of What Bitcoin Did, and I think Vivek, he does a great job sort of talking about this. The problem isn't that they don't know what Bitcoin represents; it's that they do. He sort of makes interesting analysis here, listening to Elizabeth Warren sort of over the years, my first thought was, how could anyone individual be so uneducated on an issue, so oblivious, have not done any due diligence whatsoever. But the more I think about it, the more I realize is that she's very insidious. Actually, she does know what she's doing. And I think a lot of this recent stuff, a lot of this recent information that's coming out sort of leans in that direction. I'm going to pull up Caitlin Long's take here on the whole situation. I think she does a great deeper analysis here, and then I'll offer some closing thoughts. Quiet part out loud. They're rightly worried about Hong Kong via USD stablecoins becoming a hub for USD clearing. That's outside the US's reach, while the US dithers. But it's not just Hong Kong. Obvious fast path for Milei to dollarize Argentina is via USD stablecoins. Quick comment on Milei sort of using USD stablecoins to dollarize Argentina. I think that would be the ultimate play there because Argentina's gone through many periods of massive hyperinflation. The average inflation rate over the past 40 years in Argentina is close to 200% a year. So the value of your work and the savings of your life energy has been sort of devalued by 200% per year for the last 40 years, right? Argentina did use the dollar at some point, but then that was sort of forcibly seized from people's bank accounts and converted into pesos, right? So this idea of having dollars in the bank, right? You're not immune to censorship resistance, and it's much harder to really protect your money when the powers that be, the authoritarian powers that be, decide that they're going in a different direction. So this idea of Milei using stablecoins, which exist on a blockchain and can't be seized in a lot of instances, especially on open source blockchains, it's inside of a government sort of controlled big bank monopoly. When you have USDT or USDC on Ethereum, right? You sort of have a lot more protection and a lot of ability to move your assets and control and custody via cryptography, your assets and your USDT, your USD stablecoins, right? Interesting take there. Caitlin Long, section 2. Let's see. But the U.S., under Senator Warren's control of the Biden administration's financial services policy, is blocking everyone working on regulatory compliant USD stablecoins, while letting big banks continue to build their own versions. But the world already blew past the walled garden versions. The emergence of an opaque, unregulated, offshore dollar-denominated transfer mechanism is directly counter to U.S. interests. It's up to the U.S. to offer an alternative or to define what constitutes acceptable compliance. It doesn't look like much today, but the Hong Kong-based crypto dollar and dollar-based offshore transfer systems are like U.S. national debt. don't matter until they do. As Hemingway might have put it, crypto adoption and facilitation driven by the CCP may well happen gradually, but suddenly it could become a new standard. By then, the old dollar and incumbent global settlement system will have escaped U.S. control for good. And Warren has admitted what she's really up to. She wants a retail CBDC in the U.S. And since she controls the Biden administration's financial services policy, the U.S. is heading toward a CBDC as long as Biden remains in power. Truth revealed. Warren's orchestration of Operation Chokepoint 2.0 through her control over the Biden administration's financial service appointees is really about rolling out a U.S. CBDC. This has been an open secret in D.C. since January, but it's not a secret anymore. Hashtag Hill to Die on. So some more interesting commentary on this. At first, I couldn't believe some of the takes that Elizabeth Warren was making on Bitcoin. It was so uneducated, and there's just no way that somebody could be that uneducated and really. But really, what she was doing is she was speaking to the lowest possible denominator of people. She was purposely, what it seems, lying, and that's my take, that she's purposely lying about what she truly does understand, and it's all because, so she can sort of control things behind the scenes, right? I've just haven't been able to wrap my brain around how people like Gary Gensler, who have a deep understanding of all this and understanding of the nuance, who have taught classes at MIT, and watching some of his presentations about basically totally saying the absolute opposite of what he's saying only a year or two later. How could this be? How what's going on here? How is he being controlled like this? How does he have no sense of honor, no sense of integrity? How could he possibly be selling his soul, right, for power? But that's exactly what he's doing, right? So he's good friends with Elizabeth Warren, and she's the one who sort of pulled the strings to get him nominated and put him in that position of power. And I recently was talking to a buddy of mine, and he, raised some very interesting points. If you were following the last sort of Democratic primary during 2020, Elizabeth Warren really had no chance of winning. Yet she stayed in, for a couple crucial states, right? A couple states that may have had she not been in the race, those votes would have went to maybe Bernie Sanders, and Bernie Sanders would have been in a much different position than he is, where he sort of could have actually won the election, the Democratic primary, and defeated Joe Biden. And I think that was sort of like a gift sort of to the Biden administration. And the concession for that was she gained power over all of this financial service stuff, right? And essentially gained the ability to appoint Gary Gensler to his position as chair of the SEC. So there's a little bit of light on that. Let's head back and keep reading here. But here's the crazy thing. The Fed spent the last 15 years wresting control over USD interest rates from the offshore euro-dollar market by shifting the reference rate from LIBOR to SOFR. These gains will go out the door if US sits back and lets USD stablecoins develop offshore. At TFL 1728 and I, so this looks like Tom Luongo, Head Sneech, Gold Goats, and Geopolitics. Let's give him a follow here. Now, I recorded a couple of podcasts on this very topic earlier this year. In my honest opinion, Tom is best at describing the chessboard and how John Williams at the New York Fed orchestrated the U.S. regaining control over USD interest rates by switching global USD bond markets from LIBOR to SOFR. Interesting take here. Probably worth listening to those episodes. But USD stablecoins to date, U.S. policymakers have been hamstrung by fear, Warren's control over U.S. financial services policy, and fundamentally misunderstanding open source tech. Federal bank regulators are letting JPM coin, etc. proceed while blocking open source USD stablecoins. Number 7. But the world already showed its hand. It wants open source versions. Why? That's where the best developers are working. Deep code libraries and developer tooling already exist. And wallet software is already in ubiquitous use. Walled garden USD stablecoins can't compete with that. Number 8, but if Hong Kong and other hostile jurisdictions greenlight USD stablecoins and open source protocols while the US continues to tiptoe around walled garden versions only, the end result will be the same. A whole new euro-dollar market will crop up outside US regulators' reach. Part of the problem, as FT article points out, is that most of the open source protocols on which USD stablecoins are issued are centralized to varying degrees, and that centralization can be harnessed by governments adverse to the US. Open source doesn't always equal decentralized. So here's the real. What's the optimal policy for the US? It can stick with the Warren-driven policy of ceding USD stablecoins to offshore hostile locations while pushing for a US central bank digital currency, or it can wake up and prevent ceding control over a new offshore USD market that will grow. I've analogized what the US telecom regulators did in the late 1990s when faced with bandwidth finally growing big enough to make VoIP a threat. to the old copper wire telco networks. Regulators woke up fast and green-lighted the US telcos to adopt the open source protocol VoIP. And what was the result? Most people voluntarily used telcos to access VoIP instead of making peer-to-peer calls themselves using VoIP, even though, of course, the latter is still possible. There's no uninventing VoIP. Lesson: many people will trade privacy for security and better UX. In other words, telco regulators didn't try to ban the use of VoIP within regulated telcos, while understanding that some people will still use dark markets, i.e. peer-to-peer VoIP. The FT authors are right. The policy of inaction is a policy of action against the US's interests. Let's watch to see what the US financial regulators do. When Caitlin Long has something to say, you better listen, because she is spot on with a lot of her calls, a lot of her predictions, and a lot of her analysis, right? So you go, girl. And keep putting out that fire. Keep providing good content. Next up, let's take a look here at this post from James Safard. We've looked at a lot of his stuff lately. He's got a lot of good, content when it comes to the ETF stuff and the GBTC and other Bitcoin-related sort of Wall Street analysis. GBTC is trading at a record low discount for the last few years of about 8.6%. Its official closing discount was 9.7 on Wednesday. Hasn't been this close to parity since July 2021. This chart sort of shows here is very interesting. Sort of this gap here is becoming less and less. As we move closer and closer to the launch of these potential ETFs, this gap will continue to close. And that sort of reflects that consensus opinion of the markets that, these ETFs are coming. And if you buy GBTC now, you're basically getting more Bitcoin at a discount, right? You're getting more Bitcoin that's actually in the trust. If these two dots equal each other, then that means that it's trading at parity, right? So if there's 10 Bitcoin in the GBTC trust, that means that the value of the trust is reflected equally at that 10 Bitcoin. Right now, there's actually more Bitcoin in the trust than what it's trading for. So if you buy it now and then eventually that the trust gets broken and converted into an ETF, you should be able to capture some value. This one was kind of funny by Pete Rizzo. Exactly 6 years ago, ex-girlfriend sends one of the greatest regret texts of all time. Bitcoin price was 80 cents. James, we need to break up. Every one of your friends is doing something with their lives, investing in real estate. You just keep reading about your stupid Bitcoins. So that was from 2011. And it looks like that she reopened the conversation on November 26, 2017. Hey, James, how have you been? Classic. I don't know if that really happened or not, but if it did, it's one for the history books. Stay safe, stay blessed, never stop learning, keep an open mind. Thanks for listening, guys. Have a good one.